Well, Australia might have largely managed to weather the GFC, but today experts are warning we could be headed for a mortgage crisis of our own making.
Cast your minds back to America circa 2007. Barack Obama ran on a message of hope. Rihanna became the face of wet weather accessories. And the subprime mortgage market triggered a global financial crisis. Put very simply, the GFC came about when banks gave loans to people who simply could not afford to pay them back. Workers on minimum wages, people without jobs. Now, fast forward to Australia today, while Aussie banks haven't gone as far, they've been flying pretty close to the sun.
Banks took on too much risk by extending these interest-only loans, especially on owner-occupied properties, your homes, and the repayments could now go up 63%.
So how do these interest-only loans work? To make it simple, we'll get Tommy to explain.
Imagine you want to buy a house. Sorry guys, that's as far as I got. This stuff is really complicated.
OK, Tommy, I think I'll take it from here. Interest-only means you're not making a dent in the loan, just keeping it at bay. That interest-only period usually lasts about 5 years. And when that expires, you have to start paying back both the interest and the principal. So, say you've got the average Aussie mortgage of $400,000. Interest-only repayments are around $1,267 a month. But that'll jump to more than $2,000 a month overnight.
Regulators have started really cracking down on how banks lend. It's getting harder and harder for people to get loans. But if they're coming off interest only, they might need to.
It's estimated if repayments go up by even $60 a month, around 1 million Australians won't be able to service their loan. So what happens if they simply can't afford to repay their debts?
Well, Martin North is a financial consultant and he joins us now. OK, Martin, now you've been ringing the bell on this. When are people going to start losing their homes?
Well, the problem is that it's been building for quite some time, but now we've really got to the point where there will be some households who will get in a nasty shock and suddenly find that that mortgage is not going to be able to be repaid. And that means that some of them will probably have to sell, and some of them will be investors, so that'll be fine, but there will be some first-time buyers also caught up as well, I think.
So if we've got people that are living in their own home and they're at risk of losing it because they can't repay the mortgage, who do we blame for this? Is this regulations not being tight enough? Is this the banks and their lending practices, or is it the people that are borrowing the money as well?
Well, there's plenty of blame to go around. I think that the lenders were very loose in their standards. Everyone was thinking that prices will always go up, and if you get an interest-only loan, you can get a bigger loan and therefore buy a bigger property. I think the regulators were also asleep at the wheel. They've been there for quite some time. They woke up very late in the piece. But also borrowers, of course, have an obligation too to not get in there over their heads. But in many cases, I think they were probably sold an impossible dream.
So Martin, if I want to be a bit of a jerk about this and I've been hypothetically saving up my money to buy a house, is this great news for me? Because does this mean people are going to sell their houses, prices are going to go down, and then I can swoop in like a vulture?
Well, the question is, how far will house prices fall? And, you know, some of the experts are saying, oh, they'll be about 5%, not too serious. My own view is that we're going to see prices drop a lot further than that. And whilst there are some first-time buyers who are being attracted into the market now because effectively prices are lower, my view is they will go lower still. So I would hold off. Let's see where prices go. There are so many forces all coming together to effectively drive prices lower, interest-only loans as well as other things too. So my own view is hold your fire. You'll probably get a better deal next year.
All right, Martin, we appreciate your insight. Thanks very much.
Good to talk to you.
Imagine the kind of anxiety you would have if you feel like you're sitting on a ticking time bomb, that somehow you're going to have a mortgage that you can't pay anymore.
The worst.
What do you do? Do you sell now? Do you wait? That's really, really awful. I mean, I just wouldn't sleep,
Yeah.
you know?
It's obviously terrifying for a lot of people right now, but I also know that there's a lot of people my age that have been waiting to buy their first home, desperate to do so, and they're finally starting to see the signs that maybe they'll be able to get into the market. So
one thing in the whole housing situation, there's always swings and there's always roundabouts. All right.